All right. So it happens to be today is the 6th. I guess I'm correct. Today is the 6th day of our bootcamp, and today we'll be talking about swing study. While we are not going to take, since it's Friday, I know a whole lot of we are stressed up to a large extent, and at the same time, we might just need to rest. So let's get to the business of the day. We are talking about swing study for today, and I will also get to do this by visiting the chart at the end of the day. So it's not something that I'm just going to end by we probably just doing sketches and all that. We will get to conclude today's section by looking at the chart. So now, talking about swings, we've discussed a whole lot about swings already from the time we started talking about market structure, market behavior, and all that. So we've actually talked about swings and what they mean. Now, and in our last class, I did mention how important being able to interpret a price chart, how important it is, and also if you can combine some of the candlestick patterns that we've already discussed. Now, first, if you look at your price chart, the first thing you should be able to find is the trend of the market. Now, whenever you find the trend, the second question you should be asking yourself is, if this market is in an uptrend or this market is in a downtrend, at what point should I be buying? What will I see that will clue me to considering taking a buy position? Now, some traders will say, I am a breakout trader. Some will say, I am a break and retest trader. Some will say, I trade the bounce and all that. Now, this also means that there must be something they are seeing before they take that decision of wanting to buy at any level. So understanding the swing or the swing structure matters a whole lot. Now, let's look at this. If I have price make a move this way, give me a retracement this way, and journeys to the upside, and maybe we'll have something like this. Now, in the study of swing, what we focus our attention on is this low down to this high. So why the market is within this range, we know too well that the most important levels on this chart is this high and then this low. Now, if you look at what we have in here, our concentration based on what we have presently will be on this low and this high, because this is our swing. In most of the cases, we can say that this is our dealing range. This is our dealing range. So in this case, we can say that this is our swing high and this is our swing low. So our concentration is paid on what is going to happen at this point and this point. Now, why are we paying much attention to that? We are paying much attention to that because any break of this level will signal that the market has changed direction. And any break above this level will signal a continuation for possible new high creation. So whenever we are looking at the chart, we should be able to mark out what I consider to be our XABC. Because if you can mark out that, then you have simplified your chart, and at the same time, you know your dealing range and know the swing low and the swing high you are going to deal with. So now, whenever you are looking at a swing, as far as you are labeling this swing, so let me bring about what we'll call the ABC pattern of a swing, or we say the XABC of a swing structure. Now, whenever you are looking at your price chart, the first thing you should be able to focus on is where is my XABC? So you must have to mark out your SABC before any other thing, so you know what you are actually really dealing with. So for instance, we can say that this is our X, and we can say that this is our A at this point. We can say that this is our B at this point, and we can say that this is our C at this point. Now, this is what we'll consider to be our XABC. So if you're looking at your chart, you just need to be able to mark out your SABC, where the AB is the biggest retracement that happened within a certain period. that is what your AB will be, right? Where your C will be the highest peak that the market just created. So now, if I am to look at a chart like this, where I have successfully marked out my XABC in this swing, then the question I should be asking myself is, where should I buy from? That is the first question I should be asking myself. At what point should I consider taking a buy position? Now, looking at what we have in here, one thing you need to understand is that everything that is happening around this level, everything that is happening inside here, as far as C and B is still intact, everything that is happening in here, we consider it to be a range. We consider it to be a pullback. As far as B and C is still intact. Now, if you understand that, what this means is that I can only consider that this market has changed direction if we have a break of B. I can only consider that this market is about to continue to the upside if I have a break of C. So now within the BC leg, B to C is where I should probably be looking for a possible buy opportunity in an uptrend. So in a case where I also have something like this, maybe the market did a move like this, and then I have this, and then I have this. Now, this is a case of a downtrend. So I can mark out this as my S. So I can say that this is my S, this is my A at this point, this is my B at this point, and then this is my C at this point. So if I must have to take a trade in this market, then what it means is that my concentration will be on the BC because the market is actually in a downtrend. So since the market is in a downtrend, I am focusing on what will happen at this point, because everything that is happening here simply means that if it's either the market is going to push up to a certain level, then I will sell. So we should be looking out what will prompt me to selling within my BC leg. That is our concentration. What exactly will prompt me to considering a sell within our BC leg? So what will prompt me to considering a buy within my BC leg? And that is what we'll consider when we are focusing on studying the swing. I hope that is clear. So the understanding of this plays a very key role in you taking a trading decision as far as the business of trading is concerned. So now, looking at this, looking at what we have here, you can get to say that if I have my SABC, the first thing I might want to look out for is the midpoint of my BC. Where is the midpoint of my BC? I can say that this is the midpoint of my BC, right? So meaning that since we have discussed before now that the best bet remains to possibly buy low and sell high, then in that case, I should be expecting that I might likely get a retracement that will get to my equilibrium before I will consider a buy. While there are a few other things that we'll get to talk about with time, but this should be our focus when we are looking at the swing structure. Now, there is few things I will be talking about, three or four that I should be looking out for anytime within my BC leg before I will consider a buy in an uptrend, and what I will be looking out for within my BC leg before I will consider a sell in a downtrend. So having said that, now let's get to that. Now, before I get to that, let me quickly show something on the price chart. Now, let's say I go down to the price chart, and what we are seeing on my price chart now is, let's say we use a popular asset. Maybe we are using Euro US dollar. Now, if I come to the Euro US dollar, the first thing I might get to consider is if I find out that this market is in an uptrend or this market is in a downtrend, the first thing I should be looking out for is trying to find my XABC. Now, remember that my X is considered in a downtrend, it should be considered this high. So in that case, I can easily say, okay, this market actually went down from here. It made a move this way, and it made a move this way, and we have another move this way, and then the market created a new low this way, right? Now, the question is, how do I then mark out my SABC in this kind of situation? Remember that I said that when it comes to my AB should be the biggest retracement, in that particular asset that I am watching. Now, remember, why am I considering this market like this? I'm considering this market like this because right now, looking at this, we'll have what we'll consider to be a bearish order flow, meaning that we already have this market to the downside. This market was initially to the upside, so we are no longer considering what happened here. We are paying attention to the structure that we have in here. So the market pushed down, did a retracement. Now, the question is, this retracement that we have in here, how important is this retracement? That is the question we should be asking ourselves. And I'm going to explain why that retracement might not be considered that important. Here is the reason. The reason is that if you look to your left and see the kind of price movement that we had at some point, we had a movement like this, a retracement like this, and then we'll have a new high being created at this point. Now, this particular move from here to here, this retracement here is not that important. Why? Because we didn't get any break of structure or change of character within that time. So we had a movement like this. This is the only time that we got a sort of a break of this previous low. So if I am to find my SABC in this market, then I am going to trace this as a single swing. And then this is the biggest retracement that I can see. And then I had a journey to the downside this way. Now, this is simplifying my chart. Now, you will notice that I neglected what happened here. I am focusing on the major swing structure that I can find on this chart. So when the market was moving to the downside, this is one leg, the second leg, and then we had a move to the downside. Now, if I'm to label this chart, I can say that I have my A at this point, right? I have my S at this point. I have my A at this point. I have my B at this point. Then I have my C at this point. Now, here is the thing. If I am to look for a sell opportunity in this market, my concentration will not be on BC. Why? Because if this market is to continue to the downside, the B level will not be taken out. The B level will not be taken out, because if the B level is taken out, what it means is that this market will continue to the upside, because that will present us with a bullish change of character. I hope that is clear. So in that case, B level should not be taken out. So I am looking for a sell anywhere within the BC leg, because now, while there are a few other things I need to mention with time, so I won't be talking about those things so we don't get confused. So, but this market came here. I can get to possibly show us a chart where the analysis that we had since Monday was that this market will likely journey into this area, and most likely, possibly, we might see a new low being created based on structure. So anytime you look at your price chart, please try as much as possible to be able to mark out your SABC on that chart, so you can know your dealing range and know the swing that you are focusing on to take a trading decision. That is the best way to go, right? I hope that is clear. So now, when I am looking at the swing, what should I be paying attention to? When I am looking at my BC leg, what should I be paying attention to? Now, where most persons will say, maybe when you have a level like this, let me start with what I will tag as A under the swing structure. So I can have something like this. Okay, price is to the upside. Maybe we had a price movement this way. We had a price movement this way. And then we had a price movement this way. Now, most of us in here must have heard that this is a resistance level, and that resistance level was broken, at this point, right? So most traders that trade break and retest will only wait for price to come back here, and they will look for a buy opportunity. And in this case, they will say that is resistance turned support. This was a resistance at some point, all right? And it became a support at this point. Remember that when a resistance is broken, it becomes a support. When a resistance is broken, it becomes a support. But I can get to tell you that this is not the best way to trade this. I will be talking about some few things you should look out for when you are trading, when you are focusing on your BC leg. So what should I be seeing on my BC leg? Now, first, let me get to talk about few concepts before I get down to further explanation. Now, one is what we'll call inefficiency. Inefficiency, please, there's just this can be called inefficiency. It can also be called FVG. FVG is fair value gap. Fair value gap. Fair value gap. Some persons will call it void. Some persons will call it void as well, right? Some persons will also call it imbalance. Some persons will call it imbalance. What does this mean? What does this mean? Now, an imbalance is created, either bearish imbalance or bullish imbalance is created when there is as if we have only one participant in the market. So when you see a candle without a retrace, when you see a candle without a retrace, then we say that an imbalance is created. Now, let me make a sketch of what that looks like. So now, you will get to find out that when you have a market like this and price pushes to the downside, and at the end of the day, we'll have a candle being created like this, you would have noticed that most of the time, the next candle might likely push off first, push up to a large extent, and then another candle, then the body of the candle will continue this way. Then another candle that will start up might likely first push up into this area, and you get another candle continue this way. Now, what does this really mean? What this simply means is that for every buy order, there should be a corresponding sell order. For us to have a functional market, there should be buyers and sellers. So when you have a candlestick formation, for every sell order, there should be corresponding buy order. Now, more like when we talk about the third law of motion, we'll say for every action, there should be equal but opposite reaction, right? So now, when you have something like this, if I go back to the chart and get to show us, you get to find out that when you're looking at candle, most of the candles, there is usually a retrace back before a continuation. More like as this candle is printed right now, you will get to see maybe another candle, another wick of a candle will make a move this way, and then we now get a continuation to the downside. Maybe the next one, you also get to see a wick filling up what the sellers did, and then you see a continuation this way. So how exactly is an imbalance created? An imbalance is created when you have something like this. Let's say I have a formation like this where from here price pushed down, this way, right? Now after that push down, then we had another candle just started off from here, and then we have a further downside in this market, and maybe the next candle we now have that a retrace into that one, and then we had a continuation to the downside. Now, what do we consider as an imbalance? This is an imbalance. The fact that the order here was not filled, the sell orders here were not filled. So we had more of the sellers alone in action. So there was no buyers who filled the orders here. So in that case, when you mark out this week down like this and mark out this other week that stopped here down this way, this is what we'll call inefficiency. This is what we'll call inefficiency. Some persons will also call it single print candle. Please, just understand what it means, because it doesn't, the name might not matter, because we just have a whole lot of names for it. Some people will call it void. Some people will call it fair value gap. Some people will call it imbalance. Some people will call it inefficiency. Now, when you have something like this, please pay attention to this, because we are going to talk about it and how you should probably be using it. So this is what we'll call an imbalance on the chart. That is what we'll call an imbalance on the chart. It's not hidden, it's something that you can get to find. Now, another thing is what we'll call a breaker block. What we'll call a breaker block. So you might have different interpretation, but I'm going to simplify what we'll call a breaker block and why it is important. Now, if I have a market moving to the upside, right? And maybe or maybe not, before a break of structure, I had some sort of consolidation. So let's say I have a market movement this way, I have a retrace this way, and then on price way up, there was a consolidation, maybe somewhere around here. And after that consolidation, then we had a breakout to the upside. Now, this is what I tag as a breaker block. This is a breaker block. Now, why am I calling it a breaker block? It is the last consolidation that happened before we saw a breakout. Now, why is that important? It means that there was a pause at this point, and this pause that was created at this point generated the momentum that caused the break of structure, that caused the breakout of this resistance. So now I will also get to, this is what we'll call breaker block. Breaker block. So whatever other name whatever it means to you, maybe you might have heard another different interpretation of what a breaker block is, but please, this is the best way to simplify what a breaker block. This is what I tag as a breaker block, the last consolidation before a break of structure. So I really value this. Why? Because most of the time, there is some sort of momentum that is generated at this point that caused this breakout. So we believe that multiple orders gradually stepped in here, then that comes this impulsive move. So after those multiple orders, we will see a boom that had enough momentum to break a resistant level. So when it comes to understanding the swing and what I should look out for when I buy, then these two things matters a whole lot. And the next thing is what I call a trap. Now, for me to explain that, I will get to talk about the first kind of swing that I pay close attention to, focusing on my BC leg. Remember what BC leg, when I say BC leg, please remember what that means. What it means is that, okay, the market has made a move this way, the market has retraced, and the market has continued. My interest is on the BC leg. My interest is on the BC leg, because it's from the BC leg that I will know when I am going to continue a buy in this market. From the BC leg is where I will know when I will continue a buy in this market. So we had a break of structure at this point, and this is my X. So I want us to understand that first. So we'll have X, we'll have A, and we'll have B. And my major interest is on the BC leg. The question is, where will this market come back to? Then I will buy in anticipation that the market will continue to the upside. And that is why the BC leg is important. So I will be talking about the few things that I might want to see within my BC leg before I will consider a buy. Number one is what I consider the equilibrium of the BC leg. Equilibrium of the BC leg. Now let me talk about the equilibrium of the BC leg. Equilibrium of BC, right? So now what does this mean? That I have a market that journeyed this way. and then I got a retracement this way. Let me put up that well. Okay. Equilibrium of BC swing. So now, let's say I have a market that journeyed this way. I got a retracement this way, and then I have this, right? I have this way. Now, better still, I want to make this in a way that we can get to see it better. So I have this, and then I have this. Now, this is my SABC, where this is the origin, where the market started off from. So I will say that this is my A, and this is my B, and then this is my C. Now, the first thing I will want to see in this market is the equilibrium of the BC. What is the equilibrium of the BC? The equilibrium of the BC is the midpoint of the BC swing. So I have this as my BC, and this is the EQ of the BC. The EQ here means the equilibrium. That is 50% of the swing. So I usually pay attention to 50% of swing of the BC leg. So if I am going to buy, I want to make sure that the market will return to the 50% at least before I will buy. Remember that the principle still states that we should consider buying low. So if I'm going to buy low, I want to see a retracement that will likely get to the 50% of the swing or below before I will do what? Before I will buy. Ordinarily, when it comes to that, below this level is actually called my discount. This is my discount because we believe that this is only when price falls below 50 is when price is now cheap. So I should be looking out to possibly get to buy when the market falls to 50 and below before I will look out for a buy. I just want to believe that one is clear. Now, when it comes to something like this, let me talk about what I look out for. Again, in this case, let's look at something like this. In a case where most persons believe that the best thing to do is to possibly trade break and retest, I am here to tell you that it's not every break and retest that you would trade. That is because most of the break and retest that you trade sometimes will likely fail. So now there are a few things. Number two is a breaker within my BC. Breaker block within my BC. Breaker block within BC, within BC. So what does that mean? This is another thing that I look out for when I am looking at the swing that I want to focus my attention on. Now, in a case like this, let's say we have a market movement this way, and then we had a retracement this way. Let me put this down a bit. Let's say we had a market movement this way, then we had a retracement this way, and then we have price journey to the upside. And then before then, we had some sort of consolidation that happened somewhere around here, and then we had a breakout. Now, in a case like this, this is my B, and this is my C. We understand that. This is my BC leg. And remember that I said that my concentration is to find anything that will give me a clue to buy within my BC leg. Now, this base or consolidation that happened here is what I consider my breaker block, because that is the last consolidation before we had a break of structure. This is a break of structure. So this is the last consolidation before we had our break of structure. And this is what we'll call breaker block. Most of the time we just tag it as BB. So now, in this case, if I am looking at this market, I am going to tell you that my interest to buy this asset will not be at this retest. Retest, I mean, if I extend this level, I am not considering that retest, since I can get to see that there is a breaker below that zone. This is a retest, right? This is a retest. This is what people call break and retest, right? So I am not considering this retest. right here to buy. So I am not expecting that market will come back for a retest, then I will buy. No, that is not what I am expecting. What I am expecting is that the market will most likely come here, make a little move to the upside, more of a deceptive move, and in this case, and then journey down into the breaker, which is this level, and then this is where I will now look out for buy. So whenever I am looking at a swing, looking at my BC swing, I am usually looking out for a breaker block. So I want to believe we already understand what a breaker block is. So anytime I am looking at my BC, I will try to find out, is there any consolidation that happened before we had a break of structure? I will mark out that as my breaker block, and I am going to pay attention to it because it's going to give me a clue to what the market will do. So in that regard, possible retracement into the breaker block, I will be looking for possible buy opportunity, right? So that is about that. Now with this sample here, you can actually get to look at your chart next time, find a breaker block, and then look out for how the market is going to react when price comes back to that breaker, right? Now, another thing that I also look out for is what I explained earlier as inefficiency. So now, let's say we have a market that made a move. In this case, I can get to tag this as C. Please, each and every part of this should be something that you try to master. So now the market is making a move this way. So let's say we have a structure this way, and then we'll have a retracement this way. And then on price way up, price created a sort of inefficient candle, right? So in this case, I can say, okay, we had, let me put up this way. Let's say we had an inefficient candle. I've already explained what inefficiency means. So within here, we had an inefficient candle like this. We had an inefficient candle, or then the market, after creating that inefficient candle, then the market possibly, it might not even be from here. It might be that this inefficient candle was created on very close to the structural break. Maybe we'll have something like this. I think I should make this look better for better understanding. So let's say we had price was moving up from here. Then we got to a certain stage, we get to find out that we had a sort of an inefficient candle. So from here, we had my marker is misbehaving. So we'll have something like this at this point. So we had inefficient candle in here. Then after the inefficient candle, let's also expect that price now broke out to the upside. So now the question is, in this case, I am not considering, let's say we have this, right? But an inefficient candle was created before we had a break of structure, right? So remember, price broke out of this level. This is our X, this is our A, this is our B at this point, and then we'll have our C at this point. Now, but we'll have an inefficient candle, a candle that didn't have a retrace. So in this case, I can mark out that inefficient candle this way, and then this is my BC leg. My interest of looking for opportunity to buy back this asset is the possibility of finding any good opportunity within my BC leg. So in that case, I will be expecting that the market will retrace and fill the inefficiency or void or fair value gap, whatever you might want to call it, fill that inefficiency that is created, and then the market will most likely continue to the upside. So in this case, within my BC leg, if I find any inefficient candle, then I will expect that price will come back and fill it before we look for a buy opportunity. Now, for instance, there is this, I traded GBP US dollar early hours of this morning. Let's say I do this, sorry, let's have this, right? Okay. Now, if you go to GBP US dollar, we might not really get to see this very well. But if you go to GBP US dollar, maybe towards the end, I will show this and why I traded that, right? So just we'll get to look at it together. So please, in case you have any question based on some of these things that we are discussing, in case you have any question, please possibly get to bring it up. If there's any confusion anywhere, please also let me know. If there's any confusion anywhere, please, you can always type in so we'll get better clarification. Now, since we have our price chart, it is also important that while we finish some of this, maybe if you're studying and you come across anything, you can bring it up in our next class and we can get to talk about it. Now, this is what we are looking out for. This is an inefficient candle, right? This is inefficiency in here. Let's say imbalance. Let me just call it imbalance. This is an imbalance here. So price will most likely come back and fill that imbalance before we can consider a possible buy opportunity. Now, I will be talking about another kind of pattern that I get to see when it comes to swing study before I will buy within my BC leg. I've talked about one. One is that if I am looking at my BC, I want to possibly see if there is a breaker block. That is the last consolidation that happened before the break of structure. I will expect that the market will retrace into that level, then I will buy. Then number two, I will look at my SABC pattern, and then I will look out for if there is any inefficiency, a candle without a retrace that was formed before the break of structure. If I can find anyone, I will expect that the market will retrace into that area, then I will buy. Then another thing that I also talked about is that if I'm looking at my XABC, then focusing on my BC leg, I will expect that price should at least retrace into 50% and below before I will buy. I hope that is clear. I hope that is clear. The next one is what we'll call break and retest with trap. Break and retest with trap. Now, this one that I talked about here is actually BC, BC swing, BC swing, BC swing with an imbalance. BC swing with an imbalance. So that is exactly what we just explained now. So if I have my BC swing and I can find an imbalance within my BC swing, I will expect that price will most likely retrace into that imbalance. Then I can consider a possible buy. Because most of the time, when an inefficient candle is created or when an imbalance is created, price will most likely come back to fill that imbalance. Price will most likely come back to fill that imbalance. So in that case, since I have cited an imbalance within my BC leg, then I should be focusing on the possibility of price returning to fill that imbalance before I can possibly look out for a buy. I hope that is clear. So while I'm using uptrend for most of this example, please, that does not necessarily mean that it's still the same thing when we are looking at a downtrend. Please, it's still the same thing when we are looking at a downtrend, but I am just using more of an uptrend because most of the time I think marking out uptrend is a little bit easier. So now let's look at the last one, which I will consider to be the D. What again that I do look out for, focusing on my BC leg, right? Remember, the BC is the last swing that is created. The BC is more of your dealing range. BC is where you should focus on for you to find a buy opportunity or a sell opportunity in the case of a downtrend. You focus on your BC. So you must have to find your BC and focus on your BC. That is very important. Very, very important. But in some cases, I will get to explain something. I explained that yesterday. The question is, what if your BC is very short? Please, I am not going to be able to explain that so that it doesn't bring confusion. But let me just throw a little bit more light on that, because I know that some persons here can actually understand that. So what if in a case where we had something like this, and then the market made a pullback like this, and then we'll have something like this. Now, you are going to notice that what you are seeing here, please pay attention. While with time, we are going to understand what this means. I don't expect that everybody will grab what I want to explain right now. But yesterday, sorry, not yesterday. Today is Friday. So in our last class, we did talk about how we can get to know that the trend is getting weak. How we can get to know that the trend is getting weak. Now, in a case where we have an S at this point, and we'll have our A at this point, and we'll have our B at this point, and then we'll have our C at this point. Now, you will get to notice that in this sketch that I just made, the SA is very long, right? But the BC is very short. What does this mean? It simply means that the interest of buyers that came into from B is not strong enough. Also, some sort of a sign that this market might be getting weaker to continue to the upside. Please, when you see something like this, your focus might not be on maybe just buying at the midpoint or the equilibrium of the BC leg. You should really pay attention to see the drive or the momentum that this market has to the downside. Usually, what happens in this scenario is that price will sweep liquidity below B. I've not talked about liquidity. It's only something that we'll get to talk about with time. But price might first of all step below B level before it will buy. So when you see a swing structure like this, where the BC leg is very short, please be careful about considering some of these scenarios that we've talked about, mainly when the BC leg is way shorter than the XA leg. So when most of the time, what you might likely get to see in this scenario is price stepping lower below the B, take liquidity below the B. I will get to talk about what liquidity is with time. Take liquidity below the B before we get a push up. That is likelihood of what you might get to see. So I will get to bring this up again when we have discussed the concept of liquidity or stop loss hunt, and as most people will call it. So now that's about that. Now, the last one, which is the D that I will be talking about, what I should see on my BC leg. What I should see on my BC left leg before I consider a possible buy, right? Now, BC leg, BC swing with a trap. BC swing with a trap slash inducement. BC swing with a trap or inducement. That is another one. So I'm going to explain what this means. Now, most often, when people trade break and retest, this is usually my advice for them. Now, I've already explained what break and retest mean, that because a structural level was broken, and once price comes back to it, when you have something like this, right? Now, remember that this was a resistance. So a resistance has turned to a support, right? And then most traders wait for price to come back for a retest of this zone and they buy, right? Most traders trade this, right? But most of the time, this is not the way I trade, because sometimes it does fail. That does not also mean, as far as business of trading is concerned, some things will always fail. No matter how good your analysis is, sometimes it will fail, right? So, but what am I trying to say? I don't trade call break and retest. Before I would trade break and retest, this is what I look out for. I look out for what I call trap. That the market made a move to the upside, and we got a retracement, and then on price way up, price came back to this resistance and then created a trap by, or an inducement, by showing a sign as if it wants to sell and then continued to the upside. This is what I call a trap or an inducement. A trap or an inducement. This is a trap or an inducement. So what does that trap mean? It means that the market has actually trapped in some persons because it did show a sign that it wanted to drop from here because of this resistance level, but at the end of the day it did not drop. So we say that the market created an inducement. It induced some persons to sell. So since it induced some persons to sell, the market returning into this level, most of the time it will not release those that it induced, so it will continue to the upside. So what that means is that if before a break of structure I can find an inducement or a trap, then I should expect that the market retracing into this level, that we are going to look for a buy opportunity. Why? Because of that inducement. So let me see if I can mark out this in a way that we can get to see it better. So now I have price movement this way. I got a retracement this way. And then price came back to the resistance level and created a sort of a trap and then pushed up to the upside. Now remember that this level here is my X, and this is what? My A, and this is what? My B, and this is now my C. So what did the market create here? This is our trap or inducement. This is a trap or inducement. What does that mean? It simply means that the market did show a sign of selling at this point, but at the end of the day, it did not sell, right? So a trap is created. This is what we'll call a trap or an inducement. So now, in this case, if I find something like this, because of the presence of trap here, most of the time, this level will hold if price comes back to this level. Most of the time, this level will hold. So what I will be looking out for in this case is the possibility of the market coming back into that zone to give us a buy opportunity. So I will expect that we get a return of price into this level, and then we'll look out for a buy in this case. So I will position for possible buy in this area because of the trap formation. That I have cited at this point. So it's either you call this a trap or you call that an inducement. So please, in case you have any question based on what we've already discussed, please, you can type in. The last explanation of FVG is not clear. Okay, I can relate to that. Now, let me show something on this chart. Let me go to quickly what I traded at some point for this asset early hours of this morning. Now, if I zoom out this chart, I wish I can zoom better. Now, if I zoom out this chart, you're going to find out that, look here, you're going to see an inefficient candle, right? Look at this. Just try and look at this. There is an inefficient candle here, right? Are you seeing that we never had a retrace into this candle? So there was no corresponding buy at this point. Now you will notice that what the market did to fill that fair value gap or to fill that inefficiency there, the market returned into that area. So when this market returned, this is 4 hours chart. So you might not know that there is some good money made from here down into this level. That's about 70 something pips. So when the market returned to fill that fair value gap, you will get to see that we had a drop from there, right? Now, this is a good example of what we'll consider as a fair value gap. Now, I will also get to look out for if there's another fair value gap that hasn't been filled. Now, look at this one. There is a fair value gap here, or call it inefficiency. Are you seeing it? There was no retrace of any wick into this area. So we'll have a fair value gap. Trust me, if this market comes back into this area, maybe sometime, I might not know when, maybe next week or thereabout, this area might likely generate a possible opportunity for a buy when price feels this inefficiency. This is what we'll call inefficiency. Now, you will get to check that almost every time that price makes a move, it retraces that move because we have buyers and sellers in this market, fair value gaps. The market claims to be efficient. So for us to have a standard market, an operational market, we must have buyers and sellers. So in this case, price pushed up to a large extent without corresponding sell order. So meaning that we had those who were willing to buy and we didn't have those who were willing to sell. That is the best way to explain that to a newbie. So that created market inefficiency. So whenever market creates inefficiency like this, then a return of price into that inefficiency might generate an opportunity for us in that regard. Remember that I did quote the third law of motion where I said for every action, there should be equal but opposite reaction. For every buy, there should be corresponding sell. For every sell, there should be corresponding buy. And if we don't have that, then an inefficiency is created in the market. And it's something that anytime you see it, you should watch out for it. You should watch out for it because it does play in very, very well. So if you keep looking at that, some time ago, you also get to see, are you seeing inefficiency here? What did the market do? The market came back and also retraced it. Excuse me. I just need to delete this so that I can be able to, so hold on. So now, if you look at this, you can get to see that in here, we also had inefficient candle at some point, right? So now, since you can see that inefficient candle here, what did the market do after the inefficiency was created? The market did try to come back to fuel that inefficiency by retracing into that inefficiency to a large extent before it continues to the upside. Are you also seeing that there was an inefficiency created here? Just watch. Are you seeing this one? Right? What did the market do after creating that inefficiency? The market came back and filled that inefficiency here. Are you seeing when the market filled the inefficiency? The market filled the inefficiency and continued to the upside. Now, also watch. Are you seeing another inefficiency that was created here? Right? So what did the market do? The market came back and filled that inefficiency and then continued to the upside. The market came back, filled that inefficiency and continued to the upside. Now, this is mainly when the inefficiency is obvious. Mainly when the inefficiency or fair value gap is obvious is something that you should watch out for because the market will return to it. Now, I will also get to find out possible breaker blocks. Let me see if I can find a clear breaker block on chart quickly. Let me see if I can look at the lower time frames and see if I can find breaker blocks and what they mean in the market. Breakout, breakout, okay. BTC, USD. Which asset is this? Okay, BTC, US dollar. This. I'm just trying to search in some charts. I don't have much chart opened actually. Okay, now let me explain something with the Euro US dollar chart. Maybe let's look at the 30 minutes chart, right? Now look at this market. If I was to look at this market based on what we've discussed already, that is focusing on my SABC. So let me say I am looking at this market from here to here, because from what I can get to see on my chart, this is an obvious movement in this market. This is an obvious movement in this market. Now, how do I find my SABC? How do I find my SABC? Remember that my SABC gives me a clue to what next to do. So I will look at the retracement that we had. We had a retracement here. We had a retracement here. We had a retracement here. And then we had a retracement here. All these are small retracement on price way up. So I can as well ask myself, I need to know the biggest retracement. So from here to here is 33 pips. And from here to here is 36 pips, right? So this seems to be my biggest retracement. So what do? I can say, okay, the market made a move this way, retrace this way, and made a move this way, right? So now, since this is my biggest retracement, I can label this as my S, label this as my A, label this as my B, and label this as my C. So now, the question is, where will my concentration be? My concentration will be on my BC leg. The first question I will be asking myself is, okay, since this market is in an uptrend, based on what I can get to see after marking out my XABC, the question is, where should I buy from? That is what I will be looking out for. Where should I buy from? That is what I should be looking out for. So the major levels on this chart is my A, my B, my C, and my S. They are the major levels. Is either price will come back to my A level at this point. Is either price will come back to my A level at this point. If I extend my A, I can project a line this way, and I have this. Or price will come back to my B level before I will buy. That is what I should be looking out for. At the same time, based on what we discussed, I can as well ask myself, where is the midpoint of my BC? Where is the equilibrium of my BC? So if I'm looking at the equilibrium of my BC, I might say this is the center of the swing. So in that case, I can easily say that from what I can get to see in here, if I am looking to possibly buy this market, maybe I will expect that price might likely, most likely, return to my A level and give me a buy opportunity. Why? Why will I consider my A, which is a break of structure? Now, you will get to see that when this high was created, market returned into that area and created a retracement, which we can consider as a trap. After creating that trap, what did the market do? It broke out that level. So a trap was created at this point. So in this case, we can value this A level and we can say if this market can do this, maybe this, and then return into our A level, there is a possibility for a continuation to the upside. So I can look out for possible buy opportunity on 30 minutes of this chart around here. Now, while I don't expect us to just understand everything at the same time, it is gradually you begin to practice. Someone said, okay, I've talked about FVG again. Please, do one identify the 50% from the swing? Is it from the whole swing or from the FVG in the swing line of A and B? Sorry, BC. Now, you are looking at the swing, the 50% of the BC swing. Now, for instance, we identified our SAB as this and this. Ordinarily, if I'm to ask myself where is the midpoint will be me. I can put up a line like this, right? I can put up a line like this. If I tap into this line, it will show me the midpoint. So this is the midpoint, right? Remember that I said, if I find the midpoint, this is the midpoint of B to C. B to C, this is the midpoint. Now, remember that I said that the best thing is to find a buy below your midpoint, below the midpoint of your BC leg. So now you can see that this is the midpoint of the BC leg and the market is struggling around here, but I am interested in finding a buy within what we call my discount. What is the discount? The discount is any level below your equilibrium, below the midpoint of the swing you are watching. That is your discount level. What does the discount mean? It simply means a price level that is cheap enough for you to start considering a buy. Any price level above the midpoint, which is 50% of your BC leg, what it means is that that price is still considered expensive for you to buy at that point. But if price falls below your equilibrium, then we say that price is within your discount level for consideration for a buy, because at that point we can say that price is cheaper, right? Price is cheaper, and that is why we still talk about the principle of buy low and sell high. I hope that is clear. I hope that is clear. So in case you have any other question, now quickly let's look at this market. This is Euro AUD. So let me see if I can use this as another example before we'll conclude. Now look at this market. Now let's assume I am looking at this based on what I can easily see on this chart, right? Let's look at this based on what I can easily see on this chart. Now, for instance, let's assume I am looking at only the last 3 days, right? Now, on my chart, you can see this is day 1. I will get to talk about this another time. This is day 2, and then this is day 3, and then we are including the today, which is today. So each of these demarcation that you're seeing on my chart here represents a day. So now, if I was looking at this, I can say that the market journeyed from here, made a retracement this way, and then gave us a push to the upside. So if I was to label my XABC, I can consider this as my S, I can consider this as my A, I can consider this as my B, and then I can consider this as my C. So the question I will be asking myself is, where should I buy within my BC leg? Where should I buy within my BC leg? So in that case, I can now say, okay, if you ask me here, I can find what I call a breaker block, right? There is, we had a consolidation at this point before this level was broken. We also had another consolidation here before this level was broken. But the thing that is that this is not our main level. This is not our A. So the question is, can we find another level before this level? Can we find a breaker block before this A was broken? Yes. Where is the breaker? You can get to see that we had consolidation around here. Are you seeing the consolidation that happened around here? So we had consolidation around here before our A level was broken. So if you ask me, you can get to watch this from Monday. You ask me, this is Euro AUD. I will be expecting that price will come in here and possibly give us a buy. This is Euro AUD. You can get to watch out for it. So we might see price come back into this zone around here and then possibly give us a buy. And maybe or maybe not, I will target this level. Why? Why will I target this level? There is a little inefficiency that exists around here. There is a little imbalance that exists around here. You can get to see that, right? There's a little imbalance that exists around here. So I can possibly look out for a comeback of price into this area. This is a breaker block. The last consolidation before our A was broken. The last consolidation before the break of structure. So in that case, if this is a consolidation before the break of structure, remember that this high did not break structure, right? This is the candle that broke structure. And this is the last consolidation before the break of structure. So this is my breaker block. So if that is my breaker block, then I will be looking out for the possibility of price returning into that breaker block, and I will be looking for a buy from there. Please, if you have a question, you can ask. If you have a question, you can ask. So whenever you look at your chart, try as much as possible to mark out your SABC. That should be what you need to look out for. Because now, if you look at this, for instance, let's say you look at this. Why did I consider this as my AB? Because this is the biggest retracement I can get to see. This is 137 pips. That's the biggest retracement I can get to see that happened in here from the last 3 sections. The last 3 sections, today making the 4th section. So I can say, okay, I have my biggest retracement here. Price made a move from here to here. And then I should be concentrating to call this my BC and know where the market will retrace before I continue a possible buy. Now, what we are talking about right now is enough for you to start trading, taking a decision, a personal decision on your own. If you understood market structure that we've discussed, if you understood candlestick patterns, if you understood every other explanation that we've made, and then you now understand this, and there's something else in our next class, I will be talking about demand, basis, and supply. And then in that case, you can begin to adopt some of these. When you look at your chart, you try to adopt, find some of these things on your chart, play around with it, practice, they say leads to perfection, right? So in that case, you will begin to understand how price react at those areas. When you now see that price, okay, this is a breakout block as we discussed. This is the last consolidation before the breakout. Okay, price came there. Oh, price actually bounced from there. It will begin to make sense. You begin to develop confidence, and then you will be able to continue finding some of those concepts and then begin to trade some of them. So that is about that. Now, I have a question, please. How do you identify? I think I've answered this question. Please, how do you identify the 50% from the swing? Is it from the whole swing? I think I've answered this question before. Okay, let me see. Daniel, Dr. Daniel, I don't know when you joined. He said you are lost. Okay, maybe with time you'll get to understand some of these. I might not know how new you are to trading, but it's just a matter of time, and you'll get to. Maybe in our next class, I will also get to talk about this again, and it will likely make sense. Possibly, I will advise you get access to the video and watch it again. Trust me, when you watch it the second time, so you will get clarity in some of the things that we've discussed. Just get to watch it again. In our next class, bring the questions or whatever that you did not understand, possibly watching the video again. We will get to explain that again. We'll get to explain it again, right? Please, some of us came in late. Please yes, this meeting is recorded and the video will be shared, right? The video will be shared, right? So at this point, please, in case you have any question, you can bring it up. If you have any question, you can bring it up. Let's see how we can get to do this. I have someone who is, let me see, whose hand is up. I will get to unmute you. Ezekiel.
All right, thank you very much, Mr. Chris. Please, wonderful presentation, a lot of value shared already. Thank you so much. Okay, please, Mr. Chris, you shared a cheat code yesterday, which is like your personal strategy on growing candles and shrinking candles. Please, is there anyone you traded recently that you can just point out on the chart so that we can see how that happens recently on your live chart? Your cheat code yesterday. Thank you very much. Yeah.
Okay. Thank you. Let's see if I can still remember. But most of the time, when I get to look at the chart, the one of the things I look out for mainly when I want to consider possibly taking a trade at a resistance or at a support, one of the things I look out for is the strength of the candles heading towards that level, right? Now, let's say this morning, I was looking at something from the 4 hours chart, even though that did not give me much. I think it generated only about 60 pips or so. That is this movement that happened here, but it was actually a counter trend trade opportunity. I think I left this market at 60 something pips. Now, most of the time, when price is approaching your support level or your resistance level, you need to possibly get to watch out for the kind of candlestick that the market is printing before you sell at that point. Now, I might need to go back in time. I don't think in recent time I've traded more of crude oil. So maybe as we continue, I will get to show. In fact, I will be sharing some of the possible trade that maybe I take or that I would take as time goes on. We'll get to look at some of those things because we'll be doing more of practical example with time. So I might not be going back looking out for that right now. That might likely take a whole lot of time, but we are obviously going to be taking some of those exercises, possibly even though for those who don't maybe have an active live account, you can take it on your demo and get to see how that plays out. Right. So say for instance, let's assume for this Euro AUD that we looked out for, where I said I will likely be expecting that price will come into this zone. Now, what I want to start seeing around here is not strong candles. I want to begin to see this kind of sluggishness that is happening, even though today is Friday, the market is about to close. So if that sluggishness continues, is one clue that this market will most likely bounce up from here and continue this uptrend. This is something that happens most of the time. But if I'm beginning to see giant candles towards this level where I want to possibly take up a buy, then I am going to wait to watch price action to know if it is ideal that I consider a buy at that point. So that's about that. Now I have another question. Thanks, Prof. Chris. Okay, which time frame are you doing your analysis? Now I will get to talk about Apostle. I will get to talk about what I call down, top, down analysis, what most persons call top-down analysis. For me, as an intraday trader, though I also swing trade, as an intraday trader, I don't only analyze 30 minutes chart, right? I take my entry sometimes in 30 minutes chart or 1 hour, but the reality is that I always analyze the 4 hours chart, right? I believe that you should look at what the higher time frame, though I will tell you that I value the 4 hours chart more than any other time frame. I value the 4 hours chart more than any other time frame, but I don't take my entries on the 4 hours. There is usually what I call analysis time frame, confirmation time frame, and entry and exit time frame. So they are not the same. You cannot step into maybe 1 hour chart or 30-minute chart or even 15-minute chart, start your analysis there, conclude your analysis there, and take a trade. It's usually not a good idea. The best way to trade the forex market, in my opinion, is to first of all know where, when you're going to a place, you already have an idea of the place you're going to. So you say, okay, I am going to Lagos. Then maybe you are in Port Harcourt and you say, okay, I am going to Lagos. You have an idea of where you're going to. Then what you will now ask yourself, you that is in Port Harcourt, is how do I navigate to Lagos? Right? So when it comes to trading, it becomes important to a certain level that you have an idea of what the market wants to do. The question is, let me give a very clear example. Why did I consider selling the likes of Euro US dollar today? I did analyze that market for some persons today. Why did I consider selling Euro US dollar today? This market is actually in an uptrend on the intraday. So how come I sold? That is where the idea of the time frame comes to play. I sold because the idea came from the higher time frame. Now, if I go down to the 4 hours chart, let's see if I can easily do that. Please just give me a minute before we conclude. So I open up this again. I can understand that some of us are already saturated. So I open up this again. I go down to Euro US dollar and I go down to the 4 hours chart. Now, the idea of selling this market actually came from the 4 hours chart, right? Not because the intraday is not The intraday was actually bullish, but we consider this sell because of this. Now look at what we have for euro US dollar. The market made a move this way, right? The market made a retracement this way, right? And the market made a downside this way. So meaning that if this market takes out this level, we have a bullish change of character, meaning that the market will continue to the upside. Now, if that is the case, then I can get to say, okay, if this market must have to maintain being a downtrend, then there's something that happened here that might be a topic on its own, but you can see that there's a gap in this market. There's a gap on this chart. This gap on this chart is also called fair value gap. You can see the gap. There is no candle here. There is no candle here, right? This is also called fair value gap, or some persons will call it gap down or gap up. Now, what happens before we have a gap down or gap up? What happens is when the momentum in the market is so strong, then the chart will not print and there will be a gap. And most of the time when price gaps, price tends to fill up that gap. So this was the main reason why we considered a possible sell in this market. When this market returned into this area this morning, we started looking out for possibility of a downside, meaning that if this is a market that must continue to the downside, that means it's not supposed to get into this level. Because remember, from what we have looked at today, I can say that this is my A, right? I can say that I can say that that is my S there. I can say that this is my A in here. I can say that this is my B in here. And I can say that this is my C in here. So based on this, my concentration is on BC. And I am asking myself, where will this market get to for the market to continue to the downside? Now, I am going to simplify this when I will be talking about how to use the Fibonacci. How to use the Fibonacci, what I watch out for the Fibonacci, that I'm going to simplify this even the more. It will make more sense when we are using that. So had it been I was to talk about that, you would have seen a further reason why I took that sell around here this morning, even though if you look at the intraday, the market was actually in an uptrend, right? So we will get to talk about what I call trend alignment. How do you align the higher time frame trend with the lower time frame trend? Maybe in our next class, I will bring it up. It's just something little that we can add to another topic. So we discuss it. We'll call it trend alignment. How you can relate other time frame with the lower time frame and take a decision, right? So please, this is where we'll be ending it for today. In case there's more questions, please, I will just give additional 2 minutes if there's any other question, so that Sami, you're welcome. Which time frame are you? Okay, I've talked about that. So please, let's get to call it a night at this point. I don't think Chairman Urel is back, but we should possibly get to end it at this point. Ezekiel, thank you. Linda, how you get the video will be communicated. It will be communicated to you. I believe you are in the Wealth Hub. It will be communicated to you, right? So please, let's have a lovely, lovely weekend ahead. So if you got value in today's meeting, if you got value, please, you know how you do it, right? Maybe you just type value, value, value. If you got value, please type in value. Let's call it a day for today, all right? Thank you, thank you, thank you, and let's have a wonderful,
Sorry, Mr. Chris, sorry, let me find out something from you. Your
okay.
Epic Pen, how possibly you are able to use it within the Zoom? When I use mine, it doesn't show at the other end, but it will show for me, it doesn't show at the other end. Sorry, this is like your what's it now? So in case you want to share something, I just want to know how your Epic is able to show within, and mine does not show within.
within I didn't get it. Within the
Yeah, as you're using it, I can see it. But when I'm using my audience cannot see it. I'm surprised.
maybe are you sure when you are sharing your screen, you need to share the entire screen. If you share only a particular screen, they will not be able to see it.
I get it. Thank you.
All right.
Thank you.
Okay, let's have a lovely, lovely night rest. Cheers and bye for now.